What are the basic accounting theories? Accounting is an essential aspect of a business. Thus, record keeping enables a business to furnish accurate financial reports to shareholders, lenders, and the internal reference service, among others. Whether your company is being audited or merely needs its file its quarterly takes your while. Need to have a skilled accountant on your side to prepare the necessary statement and ensure that basic accounting theories are met. Whatever case of business you run, a strong understanding of the money, why to look at your financial need and your gut grasp of accounting. This checklist is imperative of both company owner and accountant to ensure that your fiscal features and safeguarded. What is accounting theories? Is essential for accountant and business owner alike to understand basic accounting concepts. The principles behind the theories have given rise over time to the actual practice employed by accountants to ensure financial are properly managed and tracked. There are several frequently matched principles: materiality, conservative, and monetary unit assumptions. Cost principle. This principle rigorous recording assets and sum and the are accurate. This can range from this a simple or a free supplies and factories equipment the new branches depending on the sort of assets you are recording. It's possible that they will decrease of time. However, they should still be documented when you assert them. Matching principle. This principle requires that a transaction associated with a particular type of report be kept together and reported as a new unit. Under the matching principle theory, expenses are always reported in the same period, such as amount, quarter or year, and the associated income is recorded. This theory exists only in the actual method of accounting. For instance, if your company has a sales person or in commissions for your work done in January, the expense for you shall be recorded in January even if you do not pay the employee unitly the next month. This principle requires accounting to be careful and always consistent in their documentation. Materially, the notice of materially states that a standard of accounting can be implemented as long as the net reference of the use will have a small input on the books that on the reviewing this will be made. Careful judgment must increase when determining whether a specific transaction is important enough, since materially does not only specifically with transaction or need much advice. For instance, if you have a minor expense that will be spread out over a period of a year, such as your various internet charges, it may not matter whether that 214 is accounts for when you first sign the contract versus split into $20 increment over the 12 months. It will impact materiality change depending on the size of the company in question. Since smaller budgets requires that more extension is spent to X amount spent, as it references ranges for change of the world. The Securities and Exchange Commissions suggest that a line item that reference lines that exchange commissions suggest that a line item that represents less than 5% of the budget net not be accounted for by that. Anything over that amount should be conservative. This principally deals with liability to ensure that your business holds on to enough of its money for the bills it has on the horizon. Conservative regards that liability and potential liability be recorded as some estimate or anticipation. In this way, companies can plan for expenses that crop up in the future. Monetary unit assumption. This high-level accounting principle is employed for large or global companies. It considers the value of the dollar and whether this value may remain consistent or change over time by anticipating the potential fluctuations of currency. It can help business plan for future ramping up of business, expansion of production facility, or investment of fortunes. Management versus financial accounting. Justin Jacobs type of accounting may focus more on the needs of managers. Management accounting is especially helpful for company leaders, as accountants want to specifically report that will help managers make important decisions to guide the business futures. Usually, management accountants are well versed in the running of a company and are therefore better suited to profit and office to owner. Financial accountants, however, generally work to provide report indicating how well the business is being run. But type of accountant must follow the some golden rules of accounting and if working for some company adhere to the some principle of accounting for the sake of consistency. In accounting, as in most areas of business, considering a variety of options yield the most effective strategy for longevity and financial health. Professional accountants are familiar with all basic accounting theories and know how to make each work for the business they interact with. No one fee simply is necessarily big for our company, and the needs of a organization will be over time. A frequent revolution of the approach a business is taking in the accounting and financial reporting is essential. Basic accounting knowledge. Accounting run on something called the Golden Rules, which are a series of guidelines for how financial transactions should be tracked, regardless of the principle of accounting we use or whether an accounting is following a financial or management strategy. It's important that these rules are adhered to. The first of the rules deal with the double entry system above, keeping with this that is that every transaction will need to be replaced in all leads to account. For instance, if your business sold product $5,000 in accrual basic accounting, the accountant will record the transaction in the revenue credit category and account receivable for the same amount. The second golden rules of accounting use of use for what is calling real accountant. This that you always debit what comes in and credit what goes out. A real account by definition has a monetary value and is the property of the business. Lifestyle. With incomes to nominal account, you must debit all expenses and losses and credit all incomes and gains. Nominal account orders the improved capital, such as rent, discounts of commissions. Basic accounting goodles and terms. As a small business owner, you should understand basic accounting terms and guidelines so that you can ensure your accounting is work according to best practice. In every case, in transactions should be documented immediately along with the ledger date, a description, and the accountant that will be both debit and credit. Generally speaking, transactions are text in a journal. If you run a language business or have a number of complex transactions, multiple journals and used to track credit and debit. For instance, see a cash receipts journal track income and a cash disbursements journal tracks expense. Of course, accounting software has replaced physical accounting journal in most business, but the program used some basic accounting journal to keep track of finance. A chart of accounting shows the gross total of all your company's accounts. This includes asset, liability, owner, equity, revenue, cost of goods sold, operating expense, and other accounts. If you deal mostly in service rather than sell product, you won't have a cost of goods sold account. Your accountant will your accountant will recommend which category should be used and included in your chart of account based on the type of business you import. For assumption of accounting theories. Accounting theories is rigorous that accountants work on for assumption. The first assumption of accounting theory suggests that business always use a separate checking account and credit card for business payment. Keeping your personal and business account separate is not only usual for accountants to prepare financial report, but is also an requirement of generally expected accounting principles. Consequently, mixing the two accounts can make it more likely you will be audited. The second assumption of accounting theory assumes that a company will continue to exist and not go bankrupt. This assumption assumes financial statements reflect dollar amounts, not numbers such as units production, and the fourth assumption of accounting theory is that financial statements need to be prepared less on the monthly or annual basis. Basic accounting functions. Basic accounting functions are not only important life skills, they are critical to the proper management of a business. Careful record keeping is essential to ensure compliance, be able to illustrate growth and progress over time, and being accountable to company investor of leading institute. It's always important to know how much money we spend, when and when. Having the information in hand and stored in organization what makes it easy for companies and groups to know what is working financially and what may need to change to ensure improvements in the future. Overview of the functions of accounting. The 30 major functions of accounting are: number 1. The collection and store of data concerning a business financial activity. The information is gathered from source documents, recorded files in journals, and posted to ledgers, either manually or with accounting software. Number 2. To supply information that can be used for managerial reports, financial statements, strategy planning, and decisions making. Number 3. To profit control the effectively, efficiently, accurately record and process data. Role of accounting in business. Accounting plays a critical role in business. Comprehensive record keeping ensures an ability to provide accurate financial report, which might which be which might be recorded during an audit, while quality report on investor or rating institute. Everything from annual or quarterly tax filings to audits and applications for credit will likely require detailed financial statement. It's only by the maintenance of careful accounting record that this information can be readily available when needed. Be able to manage aspect of business financial healthy such as cash flow, profitability, and outstanding loans is a critical part of running a company. With this information in hand, manager or owner can determine what is work for the business and what is not, as well as what others the makes work on the improve the company overall financial health go forward. A specialty field of accounting called management accounting is particularly useful for company leaders. From management accounting accountant or tasked specifically with preparing financial report, the will assist manager is making important decisions to get the futures of the company. This differs from financial accounting in the management accountant profit guidance as to how to run a business. On the other hand, financial accounting profit report that indicate how will the business is being run. Overall, both management and financial accountant follow the same golden rules of accounting and most others to the same industry standards and general accounting principles. What are the major functions of the accountant? If you're interested in a career in the accounting field, you might be wondering what are the major functions of an accountant. Accountants are essential to business of all sizes and types because they are responsible for the collections, record analysis, and reporting of a company financial information. Sometimes accountants serve in a legally administrative role, taking information from financial documents and inputting it into the journals of accounting software. In other instances, accounting serves adverse to the company, analyzing financial record and suggesting of approach the business may take to save money or to ensure growth. Larger companies may have entry accounting department with employees who fill a to this role. In some instances, small companies might outsource their accountant. This is possible since the basic rules of accounting do not vary from industry to industry to among companies. To manage the business, accountants are usually charged with collecting, organizing, and maintaining the company's financial record. An important part of this task is ensure the records are complete with the company's of the law of the law and any industry regulation. From companies with many branches and accountant in each, it's also incumbent the accountant to ensure the incorporation accounting organization system and standards and honors as well. It's important for the sake of consistency to the entry company maintain its record someone accountant may be required to prepare tax form quarterly annual basic depending of the needs of the business depending on the size of the company. Someone is the roles many also take a human records functions and deal with the distribution of year-end tax documents to employees. Many accounting departments are also responsible for preparing step-by checks. If a company uses internal certified public accountant, tax professional, or financial advisors, it may be the role of the business accountant to interface with the contractor. The staff accountant might maintain additional record, organize needed financial statement before meetings, or act as the company representative in meeting with the contractor. Accountant also assist in making important financial decisions